The U.S. Federal Reserve held its interest rate steady as the inflation slows. Though staying cautious, the U.S. Central Bank indicates 3 rate cuts next year. Shin Ha-young reports.
During the U.S. Fed's last meeting of this year, policymakers on the Federal Open Market Committee decided to maintain interest rates for the 3rd consecutive time. With the Fed's latest move, the benchmark interest rates in the U.S. now stand in the range of 5.25% to 5.5%, marking a 22-year high. The decision is largely attributed to robust employment and a slowdown in inflation. The Consumer Price Index, a key gauge of inflation for last month, rose 3.1% on year, the lowest increase seen since June due to a drop in energy prices. Consumer prices have been slowing after hitting 9.1% in June of last year. On Wednesday, Fed Chairman Jerome Powell acknowledged that the current level is likely at its peak, but emphasized that it's far too early to declare victory.
While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic. Ongoing progress toward our 2% inflation objective is not assured.
According to the Fed, the interest rate is expected to tick down to 4.6% next year, hinting that the Fed may cut the rate by 1/4 of a percentage point 3 times in 2024. Following the Fed's announcement, U.S. stocks welcomed the news. The Dow Jones Industrial Average on Wednesday surged 1.4%, closing at a new record high. The S&P 500 rose by 1.37%, while the Nasdaq closed with a 1.38% gain. Meanwhile, the latest Fed rate freeze means the key interest rate gap between South Korea and the U.S. remains at 2 percentage points. One expert says the BOK needs a clear signal from the U.S. to consider rate cuts.
Bank of Korea may decide to cut the rates a bit earlier if they are sure that the U.S. will start cutting the rates. But again, because the Fed has not given a very clear signal on when they will start to lower the rates, it may take quite a while. If we see household debts increasing very quickly, then I don't think the Bank of Korea can afford to cut the rates, or at least not cut rates very quickly.
He added that considering the Fed's forecast of a 2.9% interest rate in 2026, the BOK may not be able to lower its rate in parallel with the U.S. pace. Shin Ha-young, 아리랑뉴스.